Welcome back. Oil prices at the lowest level of the year, trading well below $40 a barrel. Take a look, 39 and change right now, down almost 2%, following the decision on Friday that OPEC said it's going to maintain output. Meanwhile, Goldman Sachs is telling clients a recovery in oil prices will not come until 2016. I want to bring in former energy advisor to President George W. Bush, Robert McNally. Good to see you, Robert. Thanks very much for joining us.
Hi, Maria.
To what do you attribute this big sell-off in the price of oil, now below $40 a barrel?
Well, Maria, the market's coming to understand we're in a bust phase in the oil market. We've been back to boom busts for about 10 years now. OPEC is AWOL. And what we're going to relearn is something we've forgotten, because you have to be about 115 years old to remember a time when the oil market wasn't being governed by a supply manager, whether it was the Texas Railroad Commission or OPEC. We're in that world now. That's becoming increasingly clear. And as it does, people are going to acclimate to bigger swings in oil prices. Now we're oversupplied. Stocks are swelling. OPEC is oversupplying the market. Iran's headed back soon. So we're going lower. Gasoline's $2.06 now. We'll be below $2 soon. We're going to go a lot lower, but then we're going to go a lot higher, because after the bust comes the boom.
Mike?
Yeah, so I agree with you about the boom to bust. I mean, you look back, recent history shows that. But we've seen oil come down right around this $40 level, $39 level, and then it's bounced off this level several times so far year to date. Couldn't this just be another sell-off, finding a bottom, and then have it start to rally back up, seeing things such as major acquisitions in the oil space to kind of get a little momentum in the price of oil and getting it back closer to the mid-40s?
It could be. I think that's the consensus in the oil market. I have a different view. I think prices have to go down to shut in oil supply. High-cost oil producers with large operating costs like stripper wells, I think they need to come off, because every major forecaster that I'm aware of, us included, sees stocks continuing to build next year. We're still producing too much oil. And if macroeconomics disappoint, get your children and head to the hills, because gasoline prices, oil prices are going much lower. So I don't think we've seen the bottom. I think we're going to go a lot lower and then go much higher. Later toward 2020 will be much higher.
Morgan Ortegas, then there's the issue of policy. A lot of people talking about the idea that we could see the ban on the exports lifted at some point. How does that play into this discussion as well?
I mean, I think that's I think that's an interesting point. Excuse me. What I was more surprised about at the OPEC meetings, the last few, is the politics behind it and the inability, really, of the Sunni Arab states to coalesce around a policy position. They know that Iran is coming into the market. So how does that play with our export ban? I mean, I think we have to clearly do what's in our best interest, and I don't think that there is a Republican or a Democrat in Congress right now who shouldn't be supporting America having an expansionist foreign policy as it relates to our oil market.
You would think so. Bob, what do you think about that?
I think, the low gasoline prices makes positive mood music for lifting the ban. Senate Majority Leader McConnell has made it clear it's his #1 ask. So as we go into these budget talks at the end of the year, everyone understands it's his top ask. Low gasoline prices makes it easier. Study after study has shown lifting the ban won't raise gasoline prices. So the stars may be aligning. It's still a long shot because the Democrats want a high price, but not as long as it was just a few days ago. It's getting closer.
Bob, good to have you on the program. Thanks so much.
Thank you.
Robert McNally there joining us. Coming up, former